Very good evening, everyone. This is Rajendran here, joining from Webinars, and welcome everyone to a very interesting topic on trading excess using market profile. So, in this particular topic, right, we're going to look into the very important concept about market profile, because market profile itself all about excess and balance. So, excess plays a very major role in determining trend reversals. Not only determining the trend reversal, understanding the emotions which is there among the traders and investors. So in today's agenda is I designed in a very brief manner. So we're going to talk about what is excess, how the trading auction comes to an end, spotting excess from a higher time frame and spotting excess from a market profile charts, and what is the difference between excess and lack of excess. What does it means really? And of course, the Nifty and Bank Nifty futures outlook is what we're going to learn in this specific chapter. So just give me a quick confirmation about the audio and video quality. A little bit about me. My name is Rajendran. I'm a full-time derivative trader. I do trade in primarily in options, Nifty, Bank Nifty, USD/INR. And these are my primary trading instruments. Along with that, I also occasionally trade in stock futures and hedged futures. Primarily, I'll trade in hedged futures and sometimes in spreads in stocks. That's what I primarily do. And I've been trading this market since 2006 onwards. I'm also a trading system designer. I developed various systematic trading systems. I had published a lot of open source trading systems. Close than 100 plus open source systems has been thus far published in Market Calls. Market Calls is one of my blog, which I've been writing there since 2007 onwards. I've been writing about markets, market profile, order flow kind of topics. Primarily, when it comes to my personal studies, I use a combination of price, volume, and time analysis. Anything about price, anything about volume, and anything about time analysis. I do use it for my discretionary trading. The core concepts which I use for trading is primarily market profile and order flow. Along with that, I also use systems as a supportive tool, right? And I'm also the co-creator of an algorithmic trading platform called AlgoMojo. AlgoMojo.com is more of an algo trading terminal for the traders who want to automate their trades. Anyways, I guess the audio and video quality is good enough to kickstart. If yes, simply type yes so that we can very quickly kickstart with the session. Thank you, Anup. Thank you, Bhupati. And thank you, everyone, for the very quick confirmation. And thank you, Venkateshwara Prasad and Krishnamurthy and Mr. Madan and everyone. So let's talk about excess. I'm sure how many of you are very new to market profile? This is a question I always use whenever I'm talking to the traders, because hardly less than 1% of the traders I would say like less than 0.01% of the traders in Indian market, they use market profile. There's a primary reason behind that, because people are looking for confirmed things, right, and guaranteed things. Like if I do this, I want to get a confirmed profit. So somehow people are not able to connect with market profile yet. But I would say like market profile is one of the true understanding. If you study market profile, right, it will give you a true idea about how the market works, how traders exactly behave, where the weaker hands exactly behave, how the smart money exactly behave. So those kind of things will be able to understand. It's going to take a little bit of time. Of course, that the time has to be spent. Majority of the traders' expectation is like they want to learn something in 1 or 2 days, and then they want to implement from Monday onwards. Saturday, Sunday, they want to learn, and Monday, they want to go and start. That is not possible with trading. That is not possible with the market profile. Not only with market profile, you take any subject. Trading is a very deep world, right? And trading, understanding how the trading works itself, it's going to take time. Probably from your learning experience itself, you would understand. When you came very new to the market, you might have a different understanding about the markets. And as the time is going by, like 1 year, 2 year, 3 years is passing, the more the time is passing, you would have been always learning something new about the markets. And market profile is also something like that. Market profile is like understanding or trying to crack a puzzle more of. All right, so Surat says he's quite new to Market Profile. Bhupathi is new for Market Profile for the last 3 months. Nitish has been learning for the last 1 year. Of course, I've been looking into Nitish. He's been a quite regular in our sessions. Almost every session we can see Nitish Rudar coming in. Anup says is there for the market for the last 10 years in the market. And some people are saying that they cannot able to hear. So if you are not able to hear, then kindly disconnect and reconnect. Mostly that solves the issue. Or it's highly recommended to use the Chrome or Firefox browser. So Amit is saying he's quite new to Market Profile. Rajesh is saying he's been there in the market for the last 3 years. See, in the last couple of sessions, like this is more of a third session we are doing in this month. What we learned from the Market Profile is like excess and balance are two important components. On a daily chart, let me go back and pull up the daily chart over here before talking about the excess. Let's try to understand what is balance, what is excess. So this is Nifty futures charts. Every day we are going to get a profile structure, right? So we are looking into the market profile price distribution. See, Market Profile is the only tool which talks about not only about the price action, but price action combined with the price distribution. So when I say price distribution, you can see how the price is distributing over a period of time, right? So this is last Friday structure. You can see a very well clean balanced profile. So when I say balanced profile, what do I mean by the balanced profile is like a lot of choppiness. Last Friday, last 2 days, if you would have been seeing the market, right, we would have seen a lot of choppiness in the markets. A lot of chop, sideways markets. And it went a little bit deeper down and it pulls back and it went on the higher side. Right. So if I see it in the price distribution, this is a price action. What I had drawn is a simple price action, which is the last Friday's price action. But if you see from the market profile structure, in the form of price distribution, we could have learned a lot more things. Now, what we could have learned, there are two things, as I said. One is balance. A balance is a zone where more crowded activity is happening, more sideways activity is happening. In terms of time is spending more there. Frustration. Particularly if you would have been there on the last Friday's trade, you could have come up with the controlled emotions. So that is what last Friday also we had a very controlled thought. We thought like maybe we should be trading between 17,350 to 17,250 levels. That is a key important reference levels. So because we are expecting that market to balance over here. You know, right, the balancing auction is what the market does commonly on a daily basis. Daily basis, market will be at some particular place. Market will be spending more time in that zone. Repeatedly, a particular price would have been continuously traded 7 times, 8 times, 9 times, 10 times, sometimes even worse, 13 times. So every half an hour, you know, right? Every half an hour, a letter will be generated. Letter A will be generating at from 9:15 to 9:30 and 9:45, and 9:45 to 10:15 letter B, and so on from letter A to letter M. 13 letters will be generated in a day. Majority of the days, if you look into that, majority of the days you'll be finding at least 7 to 8 letters. Now, even if you go and count last Friday's activity, if you could count at the center point, how many letters we are able to see that? This is Nifty futures, right? So letter A is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 times a particular price is repeatedly touched. So means, let's say if I'm drawing a line here, I'll draw a line on this day. Every half an hour once, 11 times the particular price is touched. Means price went up, again it started coming down. Maybe again coming back up, again coming down, again coming back up, again coming down, again coming back up, again coming down. Now, in the previous session itself, we talked about how the smart money behavior is there, how institution use the location as for acceptance, an institution use that to do for accumulation or distribution. Generally, it's more of an institutional play, not even institutions, even short-term traders, big traders. They find more trades, they do more trades around those levels. Many times you'll be thinking like, sideways market means some dummy markets. It's not like that. Most of the institutions' business happens over there. Institution loves sideways markets because that is where they can accumulate larger quantity. So that is what we consider that as a fair price. Fair price happens mostly at the balancing zone. We call this as what? Fair price. So this is a zone with a fair price. But if you look at the tails, I want you to focus on the tails here. At the top, we call this a selling tail. And at the bottom, we call it as a buying tail. So later on, we'll discuss about why it is buying tail and why it is a selling tail. Okay, so the bottom we call it as a buying tail and top we call it as a selling tail. Like in candles, we have wicks. In market profile, we have single prints. So notice the single prints here. Last Friday, we have 2 single prints, the single print tails. Letter B period. This is what we call as excess. Of course, excess happens across different time frames, not only from market profile. Excess happens on a daily chart, weekly chart, hourly chart, even 15-minute chart. Across the charts, you can see the excess. So this is a place where the price is rejecting. Until last Friday, what was happening here is like price keeps on going up. Price opens. It started going down. And then suddenly the price action reversed. It went to a point which is like B period high, the B period high. It reached a certain level, 17,355. So that is the high as on last Friday. Buyers are pushing the price as long as they are in control of the markets. Because at any given time, right, the buyers and sellers will be trying to control the markets. But at any given point, one is going to win. So the buyers are continuously driving the price on last Friday up to a certain point. The higher price action is happening, lesser and lesser activity was happening. That is what auction market theory says, right? As the auction keeps on continuing, what will happen? Price keeps on going higher. When the price keeps on going higher, higher and higher and higher, it attracts very less participants. So that is why if you look into the volume profile also, volume gets thinned out at the highs. And finally, buyers will lose control of the market and sellers will take control of the price. That is why it is called as a selling tail. The buyers will keep on pushing up as long as they are not in control. And sellers will take control later on. That is how the tail forms. That is how the excess forms. Excess is primarily denoted by a single prints. So here it is only 2 TPO is what that particular day it had. However, at the bottom, if you could see, it's exact opposite to that. Let me go back to the bottom of that day. You can see that price at F period was breaking crazily. It was a crazy breakdown. Almost, I would say, like the breakdown was like kind of almost from 17 to 90. Within half an hour, the price action went down like 17 to 118 something. Almost 70 points of crash. 70 points of crash, almost equal or more than equal amount of reverse reaction is happening. A fast fall, price was really literally falling faster, and equal faster bounce also. Look at that. After F, right, we are having G period. F period was falling down and G period was rising back up. Right, so it was creating a very strong tails. That created what? That kind of price action, it created a very strong tail at F period. See, one thing you have to understand, if you look into the candlestick daily chart, the wicks are different, the single prints are different. Some people, they confuse single prints with the wicks. Candlestick wicks, WICKS. So here, how many TPOs I'm seeing over here last Friday? 1, 2, 3, 4, 5. Each and every TPO, I'm using 2 points. Each and every letters are made up of 2 points in Nifty. So I'm seeing almost 5 TPO means 10 points tail. The tail is made up of 10 points, which is a significant one. It's an excess. So the definition itself goes like this. The definition of the excess goes like this. Excess is end of one auction and beginning of another auction. Now, many people's question is like, can I predict excess? When the day is happening, when the day excess is happening, can I predict that? Of course not. Not every time, but sometimes, yes, if you understand the volume activity also, you can know that the excess has been already happened. But not on a daily basis, you cannot predict excess. You know, if it is that easy, right? Everybody will be easily can go and make money. That is not possible. Practically, it is not possible. And I've been trading market profile for the last, since 2012 onwards. I've been more than almost a decade. I've been trading market profile and Orderflow. So I can boldly say you cannot predict excess on the daily chart all the days. But some people, some days, since if you're having more screen time, you can feel that yes, the excess has been arrived. The day has been topped out or the day has been bottomed out. But not on a daily basis. Daily basis, you cannot do that. That is the reality also. Okay, then you can ask the question, why it is important? It is important because there are certain places excess brings strong support zone or strong resistance zones. Maybe I'll show you later on. I'll show you one of the example in USDNR, which happened very recently. See, excess also happens across different time frames, many time frames. Daily chart, monthly chart, weekly chart. It is not only limited only to market profile. Market profile also you can see. And the excess itself a place where emotional traders, they'll be losing it to the stronger hand players. Now, even if you look into the last Friday's example also, what was happening here is the price we are having in value area. Here is the price we are having a value area. Price is attempting a drop below the value area. You know who sells down below the value area most of the time? Any idea? Just you can comment it. Who sells below the value area low? I think we have been discussing, this is the third discussion we are making, third day of discussion. We already had 2 days of conversation, 2 different sessions. I'm sure you might have a fair idea who competes, what kind of traders they come and participate below the value area low. It is especially mostly weaker hand traders, emotional traders, breakout traders, because breakout traders are the one we dealt with them last. I mean, 80% of the traders in the markets are breakout traders, primarily. Price breaking the day low, they will come on short. Price breaking day high, they will go on short. Price breaking yesterday's high, they will go on short. Price breaking yesterday high plus 5 points, day low plus 7 points, 6 points. They have some buffer. They'll not be trading exactly the breakout plus some 5 points, some 6 points, 7 points. And majority of the beginners, they'll be dealing with some sort of breakout. They'll be watching breakouts, monthly breakout, weekly breakout, daily breakout. Somewhere those traders, most of the swing traders, they'll be mostly looking for a breakout trading. I mean, swing breakout, right? We will call this a swing breakout strategies. Not only beginners, even there are times mature traders also, they get fall into this kind of trap. The traders who are already 3 years, 4 years, 5 years in the market also, they get trapped into this market. Now, what happens here is like, if you would have seen that, repeatedly they get trapped around those levels. Price will be trading very calm, and suddenly a fast price action in the sense fast tempo. In market profile terms, we call this a fast tempo. A fast tempo takes out the price down below the value area low. Now, until then, the traders who are watching the markets, who are not participating in the markets, who are expecting a breakout, that is where they entering into their trades. Think about that. Most of the intraday traders, most of the very short-term traders, they enter into that. I can tell you very rarely they get benefit out of that. Most of the times, they enter at very wrong locations. So typically, those are the places one should be buying from an intraday perspective. Forget positionally. Positionally, it's a different game. Most of the intraday traders, they do the opposite mistake because they don't have any fair idea about which is fair price and which is unfair price. And those are the places mostly excess gets confirmed. So those are the places probably you should look for a confirmation of an excess. As I said, the excess doesn't happen on a daily basis. But last Friday, it's a very clear-cut indication of the presence of the excess. Why? Because a fast down move followed by a fast up move, it always brings the quality of an excess. The odds are very higher that the excess is likely to hold. The odds are very higher that markets are likely to hold. So those are the places. Volume also very, very high. The intensity of the volume will be very high. But if you see from the market profile perspective, even at the bottom tails, we call it as what? Unfair value. We call this unfair value because price spends very little time over there. Unfair price. And it's an excess. So what is actually happening here is the emotional sellers are losing control to the smart buyers. So if you ask me what I had done on last Friday, I've been when I see this information, the E period started, right? I also take clues from my trading system also. One of the trading system that I use is like extreme indications. So I do use it on different scales, but I prefer to use from 5 minute, 15 minute, Harley. So these are the primary time frame I use. In Nifty, I've been using this. Let me go to Nifty. Here it is Nifty. Now what I had done is like throughout the place, I've been keep on buying calls, exiting it, buying calls, exiting it, buying calls, exiting it. Probably I would have done this at least some 5 to 6, I think 7 to 8 times I would have done this. Because I had understand that there is an exhaustion is there. Whenever there's an exhaustion, I might see this kind of green color bars also. As I said, I use indicators as a kind of a supportive tool, a kind of an add-on confirmation. Market profile I use to build the context. Right? So once you know what is happening, you know which side to trade most of the times. Maybe I'll show you what I had done last Friday. Usually I don't like to share my trades. So these are the list of trades which I had done. I've been keep on trading 17,300 call option. At least I would have done some 10 to 12 times I would have done, I think. Right, so these are trades which I had done on last Friday. I've been continuously keep on trading the call options only. Yeah, trading the call option, exiting, trading the call option, exiting. Right, so that is what I've been doing. Like I'm buying at 11, giving at 12, 13, and then again I re-entered. Right, so mostly. Again, I was re-entering at 128. Again, I'm giving at 130. Again, 121, I'm entering 124. And again, I'm entering like 122. Again, I'm getting at 125. Again, one entering at 120. Again, giving back at 128. And again, entering at 132, giving at 136. Again, entering at 137 and giving at 139, 140. So this is how the day has been went for me throughout the day, right? So the key learning here is, if you understand that excess, how the excess happens. Of course, as I said, excess alone is not the key here. Excess is one of the component. And also, as I said, you cannot predict excess on a daily basis. You can predict excess only certain days. Friday is one such day. Now, we learned that there are two tails are there, the selling tail and buying tail. I'm sure now you might know the reason why it is called as a selling tail. At the top, we are having selling tail. It's called as a selling tail because sellers take control over there. Exactly. Buyers are losing control and sellers are taking control, and it forms a single prince. Buying tail is the exact opposite, where buyers are taking control at the exact bottom. It called as a kind of an responsive price action. That kind of price action we call as what? Responsive price action. A responsive price action is something they are pushing the price back into the value area. So here is my value area, which is getting formed for the day. When the price is pushed down below the value area, a responsive buyers, they arrived last Friday. They started pushing back into the value area. Now, not only this is the important indication, there are different time frames. You can see the excess. Of course, you can see it on the daily information. These are some of the daily excess which formed in Nifty futures. But let me tell you, every excess has its own story. Some sort of news at times will be associated with that. Let me tell you some of the popular excess. I'll go back to the charts and then I'll show you some of the popular excess which happened in Nifty. So I'm going to open the charts of Nifty futures. So let me go and open Nifty future charts over here. Nifty futures, let me go back and tell you, you might find a lot of excess. This is not an excess. You can see that the strong tail, this is not a strong tail, this is more of a freak highs. So if there is a freak high, you should not consider as a part of an excess, okay? It is something else. That is how we have to see that information. Generally, if there's a excess, if it is there, we could be able to see that excess formation. Maybe I'll show with the 2016 what kind of excess which happened. I'm going to start with let's quickly go to 2016. Because since then, a lot of excess happened. Very interesting excess happened there. I'm going to take a little bit of time to scroll back, but it's worth doing that. So this is back in 2016, right? So back in 2016, you remember there is a strong excess formation is there. Actually, there are two excess, but this excess, which happened on 29 February 2016, it has a strong attachment to that. You know what is the primary reason behind that? Anybody who's already there in the market, they can explain. Who's already there in the market for the last 5-6 years? I'm sure you might know. If you would have traded that particular day, you might understand what happened on that particular day. What is that day is all about? It's a budget day. Yes, Naveen is right. It's a budget day. I'll tell you, it's not only budget day. Until that budget, right? What happened is like continuously the price action was under pressure. Almost Nifty was under a bear market for more than a year. I mean, almost a year, you could say like. If you could see that the bear market was like keep on running for a longer period. Throughout the season, 2015, RBI was continuously keep on cutting down the rates. And markets also falling along with that. We have an NPA crisis, banking crisis was going on, which got arrested by a strong excess. You don't believe me? That is the day FIIs for the very first time they are started buying in a very big manner, something like some 4,000 crore or something like that. All of a sudden. Until then, throughout the pressure, they've been keep on selling. At the end of the day, we had a strong excess. It almost like the budget was running, it was running sideways. And after some time during middle of the day, during the budget, right, there was a almost a 200-300 point crash. No, back right now it is very easily happening in the markets. But back then a 300 points crash is like when Nifty is trading around 7,100 is very huge thing. From the day high, it almost 300 point crash, and the entire out of 300 point, most of the price action has been reverting back. End of the day was closing by 0.65% negative. Remember, day tone is closing negative only still. Strong emotions. This is the place, every long-term player, they started closing down their positions. Many traders, they think like the market is gone. That's it, done. Many big long-term players, they close their position and they say goodbye to the markets. Because they don't want to believe in that markets. Of course, market creates that kind of situation, right? Always. Even in March 2020 also, market had created a situation. Everybody, nobody who is already there in the market, already who been an investor, they don't want to believe in the markets at all. Many traders, the old traders, they left, and new people, they came and bought the markets back in March 2020. This is one such place where new people are coming and willing to take risk, and more smart money is getting pumped on that particular day. That determines the bottom of the day. See, when it comes to excess, forming an excess alone is not an important criteria. What is happening after the excess? That is the most important criteria over here. What we need is a follow-through rally. Again, next day, we had a strong rally. Again, more FI money has been pumped into the system. Even though FIs are considered as a smart money here, right? But as a whole, if you look into that, continuously the FIs has been keep on selling. This is the only place a transition. FIs are transitioning themselves to buyers. So it comes with a story, excess. And we also have, and later on we have one more intermediate excess. So this is a budget day. I think back then Mr. Arun Jaitley was the finance minister back then. And then we have this day, 24th of June 2016. Price was opening with almost 200-300 points, gap down. Again, another 180 points. Nifty is going down. First 1 hour is a nightmare. This particular day, right? It was Britain was attempting to leave the European Union. Brexit, we call this a Brexit. So on that Brexit day, the Britons are about to vote that they are going to leave. They want to get out of European Union. The currency crashed almost 6 to 8%, I think, that particular day. Very huge crash. Everywhere there is a panic because currencies has been crashing. Even the prop traders, they went at 3 o'clock during the middle of the night. They went to the place. Even RBI said, we are monitoring the situation. If at all any panic, we'll take control of the situation. That is what RBI said. Almost everybody was freaking out. News channels are freaking out. This could be a disaster. That is what many people, they thought. When the price opened, it was a big sell-off at the open. Huge sell-off. Emotional traders again. You know, right? This kind of emotional activity we had seen even in demonetization also. A lot of traders, they try to solve like this. This is one place again, emotional traders. They came and dumped their position. Again, many investors, they given back their, those who have any idea how this could impact the event. This is more of an event. That kind of knee-jerk reactions, they do happen in the bull market because crisis is always there. Is it a crisis? If you ask me, well, it's not a life-threatening crisis, but it is perceived as a crisis. Sometimes we do perceive, right? Sometimes we'll be perceiving, we look into the bond, the bonds are rising, bonds are falling. The moment the reporter starts saying, people will start freaking about it. Oh my God, this is something, some financial crisis is going to blow up. Right? Something like that. It is not a life-threatening crisis though, at least not like March 2020 kind of crisis. It's sort of thing, like it's kind of a bad thing in the financial industry, where the Britons leaving the European Union is perceived as a threat. But the threat was very momentary, but it ended with the excess. Even if you look into that day, the day was down by 2.36%, negative 2.36%. It has a strong connection. But what happened is, like later on, the next 5 days, it's a very slow and steady rally. We had a follow through. Excess always happens at a swing highs or intermediate swing highs. Swing highs, swing lows. You know, right? Excess is one form of a top formation. Now, what I had classified is, like I had classified some 25 ways of how a market can top out or how a market can bottom out in various ways. Excess is one of the most important way how a market can top out. That doesn't mean like every time we'll be seeing an excess. Without excess also we can top out. Recently, if you remember, there is a G2 high formation happened, and then Nifty topped out. We also talked about this. It's been there in YouTube also. I also uploaded in YouTube. It's available in webinars. You can later on go back and check it out. When the day the top happened, we posted in the YouTube channel also. The top has been done. So I'll tell you one more excess, which happened back in 2008 crisis. By the time I was hardly 1.5 years old to the markets, because I came around somewhere around mid of 2007, right? I mean, start of 2007 or somewhere is what I started my career in trading, in investing. I started as an investor and later on I converted into trader. Because the moment I started, it was a roaring bull market. And 1 year from there, almost 1 year from there, we had seen an almost 1.5 years of bear market and sideways markets. So 2008, I'm going to travel back to 2008 here. What is so interesting about 2008 is like the mother of all the excess happened over there. The mother of all the excess. I'll tell you why I call that as a mother of all the excess. I'm sure you might study the charts, candlestick charts. So you might understand that 2008, there was a strong crisis brewed out, like kind of a Lehman crisis. So this is a day there was a Lehman crisis was there. It started, I think either this place or this place is what that Lehman crisis was there. Exactly, this is the time, right? Around October, if I'm not wrong. And in fact, one of the day, this is the day, we had a very strong excess. I still remember that day because back then I used to work in Nokia Siemens network. I was working as a telecom engineer. I came back to my native for Diwali. It's a Diwali actually. On the Diwali day, it's an auspicious day. On the Diwali day, like people are seeing like almost market crashed. The price opened within 1.5 hours, market crashed like 10%. Even 1 day before to that, the market crashed 13%. So remember, just on 23rd October, Thursday it is, market crashed 4%. 1 day before that, like 5%, again 4%. Every day, almost 5% down. The next day it is 4% down. Again 13% down. And Diwali day, like Diwali back then, right? It was like during that market was running. It's not a Muhurat session or something like that. I think it's a Diwali in Tamil Nadu, but that particular day markets are also there. Something like that. The market has been crashing 10%. Think about that. 4% crash followed by 5% crash. Again, another 13% crash, and markets are crashing by 10%. Did you think any investor will survive this kind of emotions? Almost back then, almost every investor had 90 to 95% drawdown. Every investor. Luckily, back then I was like a seasonal trader, seasonal investor. When I have time, I will trade. Or when I want to accumulate, I'll invest. I'm more of a short-term investor. I never hold any stock more than a year or so. Mostly I'll be trading like 1 month or 3 months or 4 months. That's the maximum my holding period was back then. Now I am more of a trader. So back then, there was literally pressure among, if you go to any forum, any place, investors are literally crying back in those days. But it also given a deep value opportunity. The emotions was running high. In fact, there was a short video also came, like one of the short video, which has been shared back, which went viral back in 2010 or somewhere, 10 or 12, back in those times when Facebook was very new in India. Like a prostitute was recommending to buy the stock. When the markets are crashing, the guy asked the dealer to close all his position. But the prostitute, which is sitting nearby, she's asking them to, you should do the opposite. You should buy like hell now. So the guy started buying everything and anything and everything he'll start buying, whatever is coming under that time. And that is how the video went viral. I'm not sure whether still it is there or not, but back then it went viral. Because back then market recovered from this 2,500, it went to like some 6,000 kind of level, 6,000 or 7,000 kind of levels. So that excess happened on that particular day. It's a 10% crash followed by a complete 10% recovery, but still that particular day, market closed minus 0.42%. So what is the kind of emotions running here? The emotions, what is running here is like the Lehman crisis moment is running here. People are thinking about crisis. Oh my God, this is going to be a recession. This is going to be a crisis. We are doomed. But the price action was doing something different. We had a strong excess. That's why I call this the mother of all the excess, because 10% crash on an index and 10% recovery on the same day, it's something which is crazy. And that is the start of the bull market. We are there around 2022, right? From 2,500, now we are at, we even touched 18,500 plus levels. Imagine that. What is the kind of panic which was running in back in those days when financial crisis was running? At least now we don't have that kind of crisis. But always in the markets, some sort of crisis will be always running. Now, even recently we had Ukraine-Russian war tensions, sometime back COVID, and in between bond crisis. And then now every day, like North Korea was sending missiles. And there is a nuclear war threat is running. But still, we do exist, right? We still will live in this planet. But it is kind of a life or death kind of situation for the investors. So those are the places, the weaker hand investors, they on emotion, they will be giving back things to the market. At times, we trader also, we would have done this mistake. The market will be keep on falling. We want to monitor for some time. It falls a little bit more. Then we have a little bit freak out. And all of a sudden, market drops crazily and we'll start exiting exactly at the lows. And later on, what will happen? Market will start recovering back. Which is what exactly happened the last Friday also. In intraday level, it happened. But the same thing happened on a daily chart, weekly level also, hourly level also. So trading is all about competition. Where the weaker hands are supposed to lose back to the stronger hands. That is how the markets are designed somehow. Emotional traders are very much, they're supposed to, maybe the emotional traders can win. It doesn't mean like emotional trader cannot win at all. But they will be winning small battles. And when it comes to the bigger battles, they'll be losing it to the smart money most of the times. Smart money doesn't win all the battles, not necessarily. But when the excess is forming, definitely, if you are a trader out there and that excess is not breaking out, 2 times the excess has been tested. Once, this is the time it got tested immediately. Where this is the day Obama got re-elected, and since Obama got elected, market started crashing down. And again, it formed and it price came back to the same place. Again, it got back. We had Satyam crisis. You know that Satyam scam. And again, we got tested the same level. We got back to the same excess level. Price got defended. Multiple times the smart money defended around those levels. Now, this is on a daily chart. I'll show you from the US dinar chart also. Very recently it happened. I also taken a trade also. I'll show you back in US dinar charts because market profile is something which is a universal concept. So this is an excess. A strong excess has been registered on 30th of September. So we have a trading room, right? We talked about this. That there is some sort of an temporary top pattern happened in US dinar. However, there is a strong excess is there. This is very strong excess. Notice this kind of day. It's these kind of days you might crossed it if you would have seen this kind of structure. Structure shows everything. Even this kind of day also, it was something like that. Market was trading sideways. Look at that one place, that sharp drop. People freaked out of those levels. As I said, these are very tough to calibrate that whether this day, this exactly this place will be a bottom or not. If you ask me, I don't know. Because market was freakingly falling. But after some time, what happened is like how much ever they faster they fallen down, bounce back also equally came faster. See, I'm a retail trader. I cannot create excess. But I can understand once the excess is confirmed, as I said, these are the places we can understand that yes, the excess has been confirmed. Now, the stronger the excess, you see that strong downside followed by a strong up move. Price is getting down below the value area low. So mostly emotional traders mostly get stuck over there. Emotional traders, they get stuck. Last Friday in Nifty, what happened? It is just a normal excess, normal trap. But this is one of the biggest trap. Almost every Tom, Dick and Harry who was already long, you know, right, years has been keep on going up. So in between small, stronger hands also will come and play. Weaker hands also come into the play. What is the difference is like when this kind of price action happens, the weaker hand will be shaken out. They'll be closing their positions, or even some traders, they get into shorting position also. So obviously, it creates more of sellers. Either new people will come and sell because market price is going down, or the old people who are holding longs, they will come and exit their positions. Right. So what is the importance of this? If I draw a zone over here, let me draw a zone around this excess. It will be used for me as a potential support zone. So I can do what? I can double click on this rectangle. Maybe I can increase the to date, end date, I can increase so that the rectangle extends like a zone. Now this zone is what perceived as a strong support zone. So means if I am predicting a reversal, I should be, or if any time the price is coming and touching the zone, if the price is reversing back, it's more of a smart money is coming and playing around this level. In fact, the smart money presence was there next couple of days. One more time, price is entering into the zone. They're not able to enter. They're able to bounce back. So in a very, very short term, these kind of excess brings a beautiful information when you are handling positional trades, not only intraday perspective, even from a positional perspective also, positional perspective, from an investing perspective, excess plays a major role. I would say that. The only thing is we have to learn to observe the information very closer. That is the only thing that we have to do. And then we have a very strong trend day. This is one of the trend day I had participated. I took my US dinar trade over here and I closed my positions in US dinar. I traded this entire trend and I closed my positions, I think somewhere around 85.23. It's just like I bought somewhere around, I bought a call option. I was expecting a fresh all-time highs in Bank Nifty because other market profile context was set so like it's not a top. Even in our trading room, I've been keep on insisting like we could be seeing something like 83 or 84 in the series. We don't know when, but we've been nearing in terms of time. So this particular day, it started running like a trend day. So I entered in between in the middle. So it's been kept on one time framing. Back then we had an excess. The excess is the zone which I had drawn. And then we have an one time framing. Throughout the day, it's been one time framing. Means price keeps on making higher high continuously and also higher lows also. So I had to join the rally somewhere in between. Somewhere here only I had joined. I was expecting a trend day throughout the day. And I had to close out my position over here. I thought of re-entering back. I thought like, okay, let's leave it to Monday. If at all anything which is happening, Monday we'll try to enter long. That's the idea which I had in mind. So I closed my position last Friday itself. Otherwise, I'm supposed to be in the trade. I thought like I should continue till towards something like 83.5. Until that, I should continue. But in between, I closed the trade. I done one more scalp in between. I closed it out overall. So the trade is like we don't get such kind of fast price action every now and then. But this is a trade which has been done with the USDNR with 82.5 call option. Right. So I traded some 1,000 quantity. Twice I had traded. Once I just only for scalping. Another one was a positional trade. But the core idea is like it is not only excess, an excess combined with other supportive context. Excess says like there is a strong support zone is there. Yes, means you can use that as a monitoring zone. So I use that level as a monitor zone. Already once the price got tested, and it come back. You see that there is a strong excess has been made. Yes, this is there in my mind. This is one of the market generated information. It says like maybe that could be a strong support zone. See, maybe. Can it be violated? Yes, of course, it can be violated also. But what happened is like second time also, price came back, it dipped and then it got a pull back. Now it is a thing that confirmed, yes, the price has been confirmedly, it is coming back and touching that zone and it is bouncing back up. Means some smart money is one more time they are coming and observing around that level. And then the next day, what happens? We started seeing a trending day. So I onboarded on that day and continued for 2 days. The market had favored, right? Now, the exact same thing it happened in the Nifty also. If you look into the Nifty charts, let me go back to the Nifty charts here. Here is a Nifty chart. It's exactly the same thing is happening over here. So here we had an excess. If I draw a zone around this, let me draw a zone around this. So this is a zone. I'm going to draw. This excess happened on one day after Lehman crisis. Emotions are running high, but that particular day, 10% crash followed by a 10% recovery. And what we've been seeing over here, price was dipping down. So price was rising back because the US election results are going to get announced. Mr. Obama is getting elected, Barack Obama, one of the US 2 times president, right? So he got elected. And then once he got elected, market again started crashing down for no reason. Price is coming exactly to the excess zone and it is pulling back up. Now, one more time, we are seeing a Satyam crisis. Again, price is coming back down. Once again, exactly at the excess level, the smart money is coming and pushing the price up. Until then, it's a one-way rally. In this entire place, FIs has been continuously keep on selling. The entire selling itself has been attributed to FIs only. Because FIs has been doing a lot of N-carry trade back then. So a lot of FI money has been pulled out and a lot of big companies are getting bankrupt, like Lehman, Bear Stearns has been kept on getting bankrupt. A lot of FI selling has been attributed over here. And FI started, they've been selling throughout this place. From here only, the FIs, once again, they got back into the buying mode. From here onwards, they got into the buying mode back again. Okay, so generally, if I see an excess followed by an balance, an excess followed by a balance, followed by a breakout is what it indicates a fresh young trend, which happened recently in ITC, I think. You might probably, if you are already an investor, from an investor time frame, I'll show you some of the recent excess which happened in ITC. ITC, when March 2020 crisis was there, so we had a similar concept, similar thing which happened over. There was a small excess was there, a very strong excess. Maybe I'll zoom a chart a little bit. March 2020, we had an excess. So we had a strong excess on this particular day. Right? This particular day. Very strong excess, very strong tail. In fact, there was almost 4% rally also recovered back. And one more excess, which happened on that lockdown day, a mini excess. An excess followed by an excess is also an important combination. So these are very strong bottom out setups. If you look into this particular section over here, right, you could be able to see that balance. And here you'll be able to see an excess followed by a balance, followed by a breakout. We've been dealing with a very young crowd, young trend. Most of the times the bull market bonds like this. Not only here, sometime back, similar pattern happened in Bharat Forge, somewhere during 2016 or 17 in Bharat Forge. How do I remember? If you ask me, I've been trading that back then. I was trading Bharat Forge. I have to take some futures in Bharat Forge. Because we had an excess, I've been into the futures trade. This is long back in 2017. This is not a very frequent pattern though, but you can see that even I had a marking sometime back. So we had an excess. Excess is what? Tail. Let me show you. I'll go and zoom it out further. So this is how the excess happened. You can see the excess, right? It's a very deep cut and then a deep pullback. That's a nice and cool excess. And in between that, we had a tremendous bear market rally. Bear market, sideways, excess. Again, that sideways price action is happening. A very strong breakout. You know what? Why this strong breakout happened? Because they reported an almost, I think, 90% drop in revenue or some drop was there. It was an earning season. That is the day Bharat Forge shot up like some 14% or something like that. Now I taken the position. I was traveling to my workplace, to my office, because from 2014 only I came full time. So morning I taken a trade and then I was going to the office, and then in between there was a news earning announcement was there that there was a 75% or some 90% drop in profit, or they are in some sort of a loss or something. I'm not surely understand, but it's an earning season. But they're given a positive guidance. For the very first time, they're giving a positive guidance. So, right, market digested the past data, is always forward looking. That particular day, it shot up like a crazy 12.4%. A crazy 12.4%. It doesn't happen every now and then, but excess followed by a balance, followed by a breakout. Right after that, where we went. So this is how the young trend looks like. Always excess, balance, breakout. It indicates one of the best players to look for momentum investing. As I said, you don't see this kind of pattern very frequently. So recently, ITC, I think Lupin also almost we had that. But I'll tell you when the excess fails. So if you know where the excess is working, you also should know where the excess is failing also, right? I'll tell you where the excess will fail. Whenever I'm having an excess, let's say I'm having an excess. If I am having an excess, what we need, a follow through. If the follow through is not strong, again, price is getting back to trade in this excess range for a longer period. I'm talking about longer period. It has more odds of failing. Means it can fail. Or if I'm seeing a downside excess after a bearish market, a long trend, long bearish trend, let's say I'm seeing a long bearish trend. One of the day I'm seeing an excess, but after the excess, I'm seeing a long sideways markets. Usually these are likely to break down the most. Eventually, this is the one which I observed back in Bitcoin also, sometime back. I also posted in the Twitter also about this particular thing that we've been going to see a breakdown in BTC because here we had an excess. Let me show you. I'll zoom it out. You might be able to see excess, right? 12th of May, we had an excess. You see that post the excess, what is happening here is like there is a follow through, but not enough follow through. After that, the price keep on oscillating sideways for a longer period. So this kind of excess, right? Obviously, it leads to a breakdown. Maybe I'll show you what was the comment we posted on Twitter back then. One can go and search about at market calls HQ and excess. So we track excess a lot of stories you could have been able to see in the past, right? You can also go back and learn also. But one of the thing like this is the one post and excess, a larger degree of sideways price action historically points to bearishness. This is when June 7. Because we've been looking into until then there was a bearish market, almost 50% erosion, more than 50% erosion in Bitcoin. And then a pullback with an excess, very strong excess. But after that excess, it was going like a sideways market. Almost a huge time-based erosion has been went there. And now price started falling back. So this kind of too much of sideways price action, it's mostly an indication of a breakdown. I'll also show you some more examples on USD/INR where the excess got failed, how it looks like. Okay, a lot of places excess also fails also. It doesn't mean like excess is a holy grail. But the winning odds are very higher. That is the only point, okay? But there are also places you can escape narrowly if you know that the markets are going in a sideways fashion. For example, I'll show you the USD/INR futures. So this is a place where we had an excess. You can see that there's an excess here. Of course, it's not an intermediate. It's not an excess which is happening at a major high or something, but it's an excess. But post the excess, you can see that what the market is doing. It's trading in a sideways fashion. Prices keep on oscillating in a very thin zone, thin narrow zones. Price is trading back in that excess zones for a longer period. See, if it is touching and this, it is rejecting, it's something different. Here, price is trying to trade in the excess zone for a longer period. It is a sign of, I see it as a sign of an invalidation. Right? It means something else. It doesn't mean like it has to break out or something, but something else. It can break out or it can go sideways from here, more sideways. But the odds of reversals are getting very much increased on a daily scale. Now, what happened? The excess has been broken, but it went sideways for some more time. And then the breakout appeared. Okay. So there are many places it forms like an excess, but it quickly got invalidated. For example, here is another place where we had an excess. Even last Friday also it ended like an excess. Excess doesn't mean the top. Let me clearly tell you, excess alone, it doesn't contribute the top. Here we had an excess. This is a classical excess. This is a classical excess. But very quickly it got invalidated. In fact, I was expecting that kind of invalidation. Here we had an excess. This is an excess not only from the daily chart, it is also an excess from the market profile. Market profile very clearly we are able to spot on. Last Friday also it looks like an excess. Does it mean it's a top? It is not. Maybe if Monday market is going down, It could be a downtrend. But it's what is indicating right now. It is indicating like 82.82. One more big gap up is what it is expected on Monday again. So excess alone doesn't determine the top. That you need to understand that. Many people, what they do, the beginner level trader, oh, excess, that means it's a pattern. So if I see the pattern, then I have to go and if I see the pattern at the top, I have to go and chart. No, it is not like that. Excess always requires a follow through. Are you seeing the follow through? How stronger is the follow through? Those are the things where we have to understand. Or if the price, can the excess price can be tested? Yes, it can be tested. Which is what exactly happened in USD-INR. Which is what exactly it happened in the USD-INR. Maybe I'll go and show you back in the market profile. So we had an excess and we had just a price rejection around the excess. We call it as a price rejection, means price is entering into the excess, that zone. It turns out to be an excess rejection. What is the excess rejection? An excess rejection is price is spending very little time over there. Whenever a price is spending very little time and that it is moving to the opposite side, we call it as a rejection. So a price is entering into the rejection zone. It is rejected back. At least by end of the day, you know that it is a rejection. Maybe during the live markets, it is very difficult to predict or say, but at least by end of the day, you know that it is a rejection. And that is a valuable information. We have an excess. Excess is not a top, but possible top or possible bottom. So that is how I will think this is a possible bottom. One more time, I'm seeing and price is entering into the zone and it is getting rejected. Yes, again, a possible bottom. It's confirming that maybe the support is getting stronger. And then I'm seeing a trend, price is moving in my favor. I want to onboard that momentum. Okay. So it's not like I'm going and buying over here. That is not my primary intention. It's very difficult because mostly innovators, they come and trade with emotional traders most of the time. They are the one who has very strong money. Those can create the bottom. I'm a very small trader. I cannot do that kind of stuff, even though I would like to, but at this time, it's very difficult for me to do such kind of stuff. Anyways. So excess, this is not only from the daily time frame, you can see it excess from the weekly time frame also. Recently, in weekly, we had an excess. Excess, followed by that next subsequent week itself, there is a follow through, strong follow through. Next 2 weeks, there was a strong follow through. Right? Sometimes the powerful excess could have been lead to a strong idea, like it's how the market turns very swiftly. Kind of a mesmerizing thing. So we cannot ideally ignore excess. Now, some people call it as a pin bar. Sometimes you may see it like in VSA, there are like upthrust bars kind of stuff is there. Or sometimes you might be seeing like a gravestone doji or something like that. So people have different names. When it comes to market profile, we use the term excess. Strong downside followed by a strong upside. Or a strong upside followed by a strong downside. That is how the top or bottom will be formed. That particular day, the emotions will be running high. Fast price action is the key. Volume on that particular day is humongous. Emotions, volumes, how fast the price action is happening. These are the three things which contribute in identifying the excess. It doesn't matter whether it's from the market profile or whether it is from the daily chart or from the weekly chart or from the monthly chart. But excess is excess. Right? So a couple of important notes before ending the session here. Excess mostly bring trend reversal. Right? Excess most of the time it brings trend reversal. Odds are very higher. It can fail also, but the success odds are very higher. Excess combined with news-based price action has more stronger context than a generic excess. Sometimes an excess can casually can also happen. That doesn't have much of a weightage. An excess which is happening with a strong news, strong emotions, fast price action, bigger volumes, that knows that a lot of emotional traders are selling and smart money is coming and buying. Or at the market top, A lot of emotional traders are coming and buying, and smart money is coming and selling. And that the third one is the most important one. Stronger the excess, higher the odds it could act like a stronger support or resistance. And here is an example for a stronger excess, which we had seen already in the USDNR example, which occurred very recently. We also told you how to monitor the excess. See, identifying excess anybody can do. Monitoring the excess, only few people can do that. Because most of the traders in the market, right, they want to see the pattern and they want to enter into the trade. But majority of the traders, they don't have any fair idea about how to monitor the situation. Okay, the excess has been formed. Then what I should monitor? So stronger excess are often connected to emotional trading, where emotional weaker hands often lose to the stronger hands. Now, next time, if you look into the structure, you try to understand where the excess has been there. You'll be able to connect the dots, maybe. As I said, the market profile is all about puzzles, right? It's about solving the puzzles. That is how I see market profile. That is how I've been taught. I learned from Jim Dalton a lot. So he said, like, markets are like puzzle. So I see it like kind of a Sudoku puzzle. Right, to solve a Sudoku puzzle, you have to sit and think. Something like that. If you want to use market profile, or if you are learning market profile, it will make you to sit and think. All right, before closing the session here, let's have a quick idea about what the market is doing, because markets are doing something crazy. Monday, again, there is going to be a possible big gap down. Let's try to understand what the market had done so far in Nifty and also in Bank Nifty. I also tell you what I had done. So this is the day we had an RBI policy announcement day, where we had a crazy bottoming formation, a temporary bottom formation. That is what we've been so far thinking about that. The context has been saying like it's a temporary bottom formation, and been trading. I was expecting something like 17,700. That is what I've been expecting, because there was one weaker reference level being there, right? But then as the market has been progressing, post the Monday, there was a gap down again. It's still an inside bar. There's no clear acceptance. So because of that, I have to restrict myself to 17,450, which is what the context that we've been discussing in our Slack community also. And then what we had is like a kind of a price action. We've been talking about a trend. If at all, if it is starting, a trend always starts with a rejection or with a strong acceptance. Last Friday, though we had a very minimal clues, the clues are not much. The clues are not much, but we had only one thing we had seen. There are two back-to-back excess we had seen. So there has been a nice excess here. You see this excess, this particular day, there was a huge gap up. Huge gap up. Almost everybody was willing to buy the dips. That has been, trader has been advised. Most of the TV, I don't look into TV channels. I scroll through Twitter, but by then morning, right, a couple of TV channels will be updating their views. They said like the profit booking is likely to happen, but I think buying the dips will work. So you should start buying the dips. Even last Friday also, like price was going down and then people bought the dips. But still, what happened last Friday is like we had two continuous excess. We had an excess here, and we also had a very small excess over here, two continuous excess. Now, when these kind of two continuous excess is there, you should be a little bit careful. It doesn't mean much of a drastic downside move as such, but you have to be a little bit cautious. And one thing is like value started building lower. That is also not a major issue though, but sometimes when the markets are going sideways, still market can go and do an value area building sideways. But value area built sideways, back-to-back excess is there. It's a kind of a caution. So what I had done is like I took some P's back home. So that is what I had done. I thought like should I do or should I not do? Should I do or should I not do? After a lot of that kind of struggle, mental struggle, I finally okay. I thought like let's take some little bit of peas. We'll take it back home, but not much in a great quantity. Not in the money or something like that, because if it is in the money, we'll come and Monday will come and add more. That is what the intention here is. But I thought like we'll take some small risk. I ended up buying an P last minute when the markets are about to close. I think I some 10-15 minutes before I just bought that. I think somewhere around when I had bought. If I start with the time, yeah, around 3 o'clock itself I bought. 3:05 I bought. When it was around like 42, 43, I bought around that level. Usually I'll try to go neutral because I'm supposed not to take any view because there is not much of a view, not much of a stronger clues. But there are only very limited clues are there. Limited, what are those limited clues? There are 2 back-to-back X's. So 2 back-to-back X's. This is a strong X's though, definitely a sure, very strong X's. But these are marginal X's. It's a good X's though. If it is more than 2 TPOs or more than 2 TPOs, we consider as a good X's. It's not a stronger X's, but stronger X's happened on 6th of October. And value area is also building on the downside. So I thought like maybe if the markets are willing to come down, I should target around 16,750 levels. So that is what my primary intention is. Next week, probably Monday, we're going to see a gap down. Maybe emotional gap down. Again, once again, price might try to bounce or something like that. We have to understand how the market is going to open at on Monday. You know, right? Monday, there is as of now, last Friday, the US market crashed like almost. Indian market though closed a little bit positive. US market, there was a strong downside happened over here. Maybe the sentiment could be impacting the Indian market also. What is so impressive is like US market, the VIX got increased a lot. So US market, there is a 2.75%, a small increment in the VIX is happening. Indian market, thus far, there is no VIX. So if Monday, if I'm seeing any panic which is hitting, so right now the S&P is pointing at 17,070, which is like almost 244 points down. See, opening a gap down, mostly emotional traders will come and sell. We had seen in the first session itself, we had seen about emotional traders, how they behave. But after that particular day, what is going to happen, that is going to be really important. If that is the case, I am expecting in Nifty possibly 16,750 levels for the coming week, which is nothing but the RBI policy announcement day low. I'm expecting once again to come back and break it to the downside. If there is going to be any follow through, because we have back-to-back excess, value area is building lower, it's a sign of a caution. If market started attempting down, my indicators will be started moving down. As of now, some of my indicators which I monitor, it's still in positive state. Low time frame indicators mostly turned negative, like hourly it has been turned negative. But if Monday, if it's going to turn negative here, then more or less next week, right? So we might be targeting towards the 16,750 kind of levels. All right, so that is a primary intention. Even in Bank Nifty also, I'm expecting a similar, targeting the similar recent low of Bank Nifty. Low is what I'm attempting to target over here. If any downside move, we should be moving towards the recent swing low. That's a very short-term view that I could think of at this point in time. Maybe next week, maybe the focus will be primarily towards the recent swing lows. Because already the US market has been keep on running in a strong downtrend. Though Nifty is not responding thus far, but I think now from here on, maybe whatever the S&P is doing, when increasing S&P is doing with increased VIX, all the global markets will be follow through. Very few places, the S&P, when S&P is doing a strong downside move, not every time Nifty will follow through, but this time I'm thinking that could be a follow through selling could be happening in a very short-term basis. So what S&P is going to do from here on, it's going to be very important because it has been already crossed that bear market threshold, almost now 25% or a little more than 25% down, I think. are getting very close to 25% downside move. So the focus is not to monitor US markets, but US markets it's going to impact the Indian market. At least by end of the day, if you are looking into what US market had done, what US market done is not important. But whenever US market is doing something crazy like this, definitely at least some knee-jerk reactions will be going to happen in our markets. Later on, markets are going to trade on their own. So some small downtrending pressure is coming in case of Nifty. So that is not a good sign from a short-term perspective also. Even from a medium-term perspective also, not going to be a good sign. Let's see how it spans out. I'm sure in today's session, you could have learned something very new things about excess. If yes, please type. You can go and write testimonials. There is a way you can go and review your comments. If you like the session, then also you can write your comments. Go to that course. I think you can go to webinars. I'll tell you where you can write the comment. Many people asked me where I have to write the testimonials. So if you go to webinars, under the courses that you've been attending right now is the how to spot excess. So here, if you scroll down, there is a way you can write the comments. Here you can write your comments. If it is good or bad, you can go and write it out. That is the least thing I'm expecting from you. People learn from us, but what they don't give is like they don't return back their comments. So we don't know whether we are teaching really good things or bad things, or we even don't know what they're expecting. So whatever is coming to our mind, we've been keep on teaching us. So help us improve. And if you really like the subject, please let the other participants, let them know so that it could help them as well. So I say thank you for coming by and attending the session, and thank you for spending your valuable time with us. Thank you once again. Bye-bye.